In today's market update, we're going to be taking a quick look at many markets. If this is a format that you enjoy, please let me know in the comments. We're going to start off today with a quick look at the S&P 500, and this is the analysis that we've been tracking for some time. We have an important trough over here, of course, in October of last year, which you can see, according to this analysis, has been phased as a trough of the 40-week cycle. It is also possible that this is a greater magnitude trough, perhaps even an 18-month cycle trough that formed in October of last year. I've discussed that possibility in pretty much all of my recent market update videos. The important thing is what has been happening since then. We have a very good 80-day cycle, which ran at 70 days. Of course, the average wavelength of the 80-day cycle discovered by Hurst 50 years ago was 68 days. And if you don't understand why an 80-day cycle has an average length of 68 days, I would encourage you to download the 10 Core Concepts document that there is a link to in the description below this video so that you can understand why that is. What has happened since then is that we have experienced a 40-day cycle trough. There has been some discussion about the position of this 40-day cycle trough. I would encourage you to take a look at recent market update videos for the S&P 500 to understand the discussion. The most likely position for this 40-day cycle trough, in my opinion, is still at the end of January, although there are some arguments for positioning that trough over here in the middle of February. Zooming in on the price action since the 80-day cycle trough in early January, you can see the difficulty with positioning the 40-day cycle trough because of the consistent upward movement of this market. In fact, the only time that price really succeeded in coming below the 20-day cycle FLD was for this low price over here, which you can see, according to this analysis, has been phased as a 20-day cycle. In my opinion, it's not important to spend too long refining the details of this analysis because of the fact that there has been such a strong upward bullish pressure. We need to enjoy that bullish movement. Clearly, the market is in the grips of a very strong bullish influence. The important thing, of course, is that we have our next 20-day cycle trough looming ahead of us. And as discussed in recent market update videos, price would normally be expected to drop below this 20-day cycle FLD on its way down to the 20-week cycle trough. We do still expect that, but we have got to bear in mind the context of the situation. This is clearly still a very bullish market. If we count the number of days that have elapsed since this 80-day cycle trough, you can see that we have a high price at 56 days after that 80-day cycle trough. 56 days out of a 68-day cycle indicates very clearly that the bullish pressure is still very much active in this market. And so my point is that although we do expect price to drop down below the 20-day FLD on its way to the 20-week cycle trough, which as you can see is expected towards the middle or end of March, the sheer persistence of this bull warns us that that might not provide a tremendously good shorting opportunity. Let's take a look at a very closely related market, the Nasdaq. The Nasdaq, of course, has a very similar analysis to the S&P 500, so there is not very much to add about it, except for the fact that the October 2023 trough, as you can see in this particular analysis, has been phased as a 54-month cycle trough. This is a possibility I have suggested in recent market update videos, and it's a very interesting one to consider. It would certainly explain the persistent bullishness of this market, because if price is rising out of a 54-month cycle trough, that provides enough impetus to explain the consistent bullishness. Here again in the Nasdaq, we have an 80-day cycle trough in early January. The Nasdaq is interesting in that it positions the 40-day cycle trough at a later position. I mentioned when looking at the S&P 500 analysis that there were various possibilities for this 40-day cycle trough, and in this Nasdaq analysis we consider one of the possibilities, which is in fact a late 40-day cycle trough. You can see that 47 days elapsed into that 40-day cycle trough, which seems unlikely because that is a very long 40-day cycle. but it is not impossibly long. If we stretch the 40-day cycle, as this analysis does, then that simply suggests that the 20-week cycle trough that we are expecting is going to occur a little bit later. If the shorter cycles are expanding, then of course they will push out the synchronous 20-week cycle trough. That is marked by this circle and whiskers for the 20-week cycle. Those shorter cycles expanding will push that trough later, indicating that we might have until the end of March for that 20-week cycle trough to form. Again, we are going to be watching the 20-day cycle FLD very closely in terms of seeing how price reacts when it comes down to the 20-day cycle FLD. It is expected to cross below that FLD on its way down to the 20-week cycle trough. But bear in mind, the fact that we're expecting price to cross down below the 20-day FLD does not necessarily mean that price has already turned around and that this bull move is over. We need to be very careful of the danger that cycle analysts face, that because we are looking at the next price action, we mustn't assume that the current price action is over. Now let's take a look at gold. Here is the analysis of gold that we've been looking at for some time. We have an 18-month cycle trough also in October of last year. We have an 80-day cycle trough in gold in the middle of December, as opposed to the stock markets, which of course experienced that 80-day cycle trough in early January. And so, as opposed to the cycles expanding, which they seem to have been doing in the stock markets recently, we have an example of the cycles compressing in gold. We have a 20-week cycle trough, which I have discussed in recent market updates for gold, that formed over here in the middle of February. So let's zoom in and take a look at the more recent price action in terms of what gold has been doing. There is our 20-day cycle FLD. Notice the GH category interaction that occurred here just before the 20-week cycle trough formed. Here is our A category interaction where price crossed up above the 20-day cycle FLD. It achieved the target generated as a result of that price cross last week. The fact that price has exceeded that target is a good sign. It tells us that the bulls are active in gold at the moment. Notice too the way in which price came down and found approximate support at the level of the 20-day cycle FLD. And it did that at about the time that the 20-day cycle trough was expected to form. There is the nest of lows at the foot of the chart. As a matter of interest, that low point, which is the probable 20-day cycle trough, occurred only 14 days after the 20-week cycle trough in the middle of February, which is slightly short for Hurst's default nominal model. But bear in mind that his default nominal model was constructed on the basis of an analysis of stock markets. There has been much discussion about the correct nominal model to work with when it comes to gold, and I take my lead from the late work of John Eastreich, whose avatar was Silent One, a very experienced Hurst cycles analyst, particularly when it came to gold, and he recommended working with a shorter nominal model in our gold analysis. And you can see that this shorter nominal model certainly seems to be describing price action very well here. Notice the shorter wavelengths that you see at the right-hand edge of the chart over here, with the 18-month cycle beating recently at only 13.3 months. The average length discovered by John Eastreich was about 14 months. And so what are we expecting next with gold? Well, having achieved the target generated by this first price cross of the 20-day cycle FLD, and having found support in a BC category interaction at the time that the 20-day cycle trough formed, the next thing that will happen is that we are expecting price to come down into a 40-day cycle trough in about the middle of March. Price is usually expected to drop down below the 20-day cycle FLD on its way to achieving that 40-day cycle trough. But don't be surprised, because of the recent bullishness in gold, if price fails to cross below the 20-day FLD and instead finds support. Now let's take a quick look at Bitcoin. Bitcoin has also been a bit of a poster child for the Hurst cycles approach recently. We identified a 20-week cycle trough over here in the third week of January. And as I pointed out in a recent market update about Bitcoin, again, price found approximate support at the level of the 20-day cycle FLD at the time that the 20-day cycle trough formed in early February. Here we can see that the 40-day cycle trough has also formed in Bitcoin at this low point over here. And here too is an example where price did not cross strongly down below the 20-day cycle FLD on its way to the 40-day cycle trough, which is not a flaw in the system as such, but an important indication of the persistent bullishness in this market at the moment. That bullishness, of course, showed itself very strongly last week with this big move up. And so the bulls are clearly in control of Bitcoin as well. What is expected next? Well, here is our 80-day cycle trough, which is also expected towards the end of March. Again, we would expect price to cross down below the 20-day cycle FLD on its way to achieving that 80-day cycle trough. But I must caution you again, the fact that that is the next thing that is going to happen in cycle terms does not mean that the bullish move is over yet. And so we should enjoy this bullish move until we have some clear indication that the peak has formed. If the 20-day cycle FLD is a little far away from price for you, then watch the 10-day FLD or the 5-day FLD. Or if you like, go into an intraday chart and watch even shorter cycle FLDs for evidence that the peak has formed. Now let's hop right across the oceans all the way to Australia. This is the Australian Stock Market Index, and here you can see we have an 18-month cycle trough phased at the end of October last year in the Australian market. We have our 80-day cycle trough, which I mentioned in the previous market update in which I discussed the Australian Stock Market Index, occurred later than it did in the US markets in about the middle of January as opposed to the beginning of January. The exact position of the 40-day cycle is a little difficult to determine. You can see that according to this analysis, it has been displaced to this slightly higher trough rather than the more obvious trough over here in the middle of February. Placing it in the middle of February would have brought this analysis back in sync with our analysis of the S&P 500. But that would require a fairly quickly adjusting cycle wavelength. As you can see, we have some long 40-day cycles that elapsed over here, and positioning the next 40-day cycle over here in the middle of February would have meant a sudden compression of that 40-day cycle. It is possible that the 40-day cycle did occur earlier. That is not an impossible occurrence, but the position for it that has been provided by this analysis at this later and slightly higher trough seems very reasonable. Very often when you get this slightly triangular sort of price movement, the correct position for the trough is actually at this last wave of the triangle as opposed to the lowest price. And so I'm very happy with this analysis. The important thing, of course, is that we are expecting a 20-week cycle trough to occur in this market as well, probably at the end of March. We have a good and very interesting VTL to watch in the Australian market. There it is. It is the 80-day cycle VTL. And so when price crosses down below this 80-day cycle VTL, we will have evidence that the 20-week cycle peak has formed and that price is on its way down to the 20-week cycle trough. Zooming in for a moment, we have, of course, our 20-day cycle FLD in the Australian market as well. And again, we are expecting price to cross down below this 20-day cycle FLD on its way to the 20-week cycle trough. Finally, let's cross some more oceans and take a look at the DAX. This is the German market. Again, we have an 18-month cycle trough at the end of October last year. You can see the principle of commonality that Hurst defined 50 years ago at work here. All of these stock markets have a great deal in common, in particular that 18-month cycle trough in October of last year. Although there is still some debate to be had as to whether that is an 18-month cycle trough or a 40-week cycle trough. Here is the 80-day cycle trough in the DAX, which, similar to the Australian market that we looked at a moment ago, occurred later in January as opposed to the first week of January, where the US markets seemed to form that 80-day cycle trough. Here is our 40-day cycle trough, which occurred again not deeply below that 20-day cycle FLD, but at about the level of the 20-day cycle FLD, providing evidence that we have excess bullishness in this market. By excess, I don't mean that there is too much, I just mean that there is more bullishness in this market than you would expect in a balanced market. And so that is something to bear in mind if you are trading, that there is a bullish imbalance currently at play. Our 20-week cycle trough is expected towards the middle, perhaps late March. Here you can see the very displaced 20-week cycle circle and whiskers. What does that mean? It indicates that the shorter cycles, in other words from 80 days and shorter, have been expanding. According to this analysis, it might be just possible to argue that this trough that occurred in the middle of January was a trough of the 20-week cycle. Notice how the whisker just overlaps the formation of that trough. But that is a less likely situation. The more likely situation is that the 20-week cycle trough still lies ahead of us. Again, zooming in, we are watching this 20-day cycle FLD for evidence that price has turned down and is coming into this 20-week cycle trough expected towards the end of March. I do hope you found this market update useful and interesting. This is a new format that I am exploring where I give a quick update on many markets. Please let me know if you find it useful. Leave me a comment below this video and, as they say, hit that like button to show me that you enjoyed it.